Hemang Jani as well joining in on the show. Hemang, good morning. Let's get in a sense from you first up as to what the outlook is when it comes to the entire EV push, given that we're talking about this scheme. If we could take off from that conversation, the management of Atul Auto also saying it's going to benefit the entire EV value chain. Your take?
Good morning. So I think this fact that there is going to be a certain amount of incentivization by the government is pretty much known, and to my mind, the actual rollout is not that good compared to what the market was expecting. Also, EV as a theme, there is so much of hype, and you see so many IPOs, even some of the existing players who have that. Offering are commanding much higher valuations, whereas the actual growth at the ground level may not be that good. So my belief is that yes, the overall story in India at least will continue for some more time. But it would be better to play it through some of the incumbent players. Maybe something like two-wheelers. Let's say you have Bajaj, Hero, TVS. Maruti also, we had this indication that a large part of the growth will come through from hybrids or EV. So I think it makes more sense to go with those established players rather than trying to find newer emerging stories with very high valuations.
Meantime, let's get in a take from you, Hemang, as to what the outlook is when it comes to Nykaa, given the fact that we've got a brokerage note this morning downgrading the stock, talking about how the QCOM portals are increasing assortment when it comes to the beauty and personal care products. They're trimming their EBITDA estimates by 3 to 7%. What's your outlook, given the fact that there has been a sharp run up here?
So Nykaa, off late, we are seeing a bit of a traction, but when you look at the actual business performance, it's kind of lagging behind, and we have a major disruption, come through from the Reliance retail. Also, the fact that the entire story will take much longer time to really play out in terms of numbers. So, if I have to play the platform story or the emerging theme, I would rather be more comfortable getting into a Zomato or First Cry rather than Nykaa, which has been a laggard and a stark underperformer in the last 1 year.
All right, that's the view coming in.
Hemang, there is no case for valuations for FMCG stocks, right? One side we are making a case that markets are rich, valuations are expensive. FMCG stocks were always expensive. Why has this sudden gold rush started there?
So, Nikunj, before I answer your question, I think when you look at FMCG and there is a common perception that the valuations are high and people never make money. If you look at the price pattern of some stocks like Colgate, last 1 year is up 84%, right? Britannia is up 32%. So you will have pockets within the category where you see significant outperformance despite the valuations being very high. So I think when the markets are at very high level, when your broader markets are quoting at very high valuations, and nobody is bothered about what kind of numbers one is going to really look at. Typically, as a part of the rotation, some investors prefer to go into defensives where the valuations are high, but in times of volatility, at least you will be able to safeguard or create some stability in the portfolio. So I think from that perspective, this theme surely makes sense.
What's the outlook as to how the crude oil price fall could really benefit a number of sectors, companies, OMCs? What's your take?
I think overall, I think good news for us, given the fact that crude prices were already quite subdued and in the recent past, there has been a sharp correction. So while at a broader level, it may not be a great sign, but I think some of the pockets, particularly some of the paint companies, Asian Paint, Indigo Paints, tire names, Apollo, Seat, Balkrishna, you may see a short-term tactical opportunity there given the kind of weakness that we have seen. For tire, the only issue is that the rubber prices also have really gone up quite a lot. So the entire gain, let's say relating to crude, may not really reflect in the numbers per se. But yes, it does provide a good amount of technical opportunity for the tire and paint companies. I would stay away from the oil marketing companies because we are heading into elections in few states, and just to get some more positive sentiment, government may roll out some kind of a price cut, and that may not be that positive for the oil marketing companies.
Stay on.
Now we can make a case that oil is down. And you could ask yourself, let's first understand oil. Why has oil come down? War has happened. Geopolitical tensions have not completely died away. OPEC has indicated about a production cut, and yet oil is not coming right back up. So, is this some kind of an indication coming from the oil market that we are bracing ourselves for a slowdown in the second half of this year? Or this is more technical in nature, more like a transient selling, which will get digested and which would get absorbed eventually going forward? Now, that's one thing you need to understand about oil. Second, the simple, easy, common sense trade is oil goes down, you buy oil consumers. Big beneficiary are paints. Second big beneficiary is OMCs. Another big beneficiary, airlines. Now that easy trade has been oil goes down, you buy paint companies. Oil goes down, you buy OMCs. And that is where I think I differ. While paint companies will benefit, they will only benefit if oil stays at these levels for a sustained period of time. One. Second, for oil marketing companies, the last fuel cut happened in, when did the last fuel cut happen? The last fuel cut actually happened in March 2024. That time oil was at $78. Nothing's happened after that. State elections are around the corner. And if ahead of state election another fuel price cut comes in, then all the benefits of this fuel price cut or oil or crude drop will completely go away for oil marketing companies. So there is a reason why these oil marketing companies are not really moving in tandem with how oil prices have moved. Hemang Jani, you can agree with me, you can choose to disagree with me also. I will not take it personal, promise.
Yeah, so Nikunj, you have outlined it pretty well. I think we have to also understand that the oil marketing companies have seen a very strong outperformance in the last 1.5 years as a part of the PSU theme. And the performances also have been by and large good. If you see, if you exclude last quarter, where we had a major one-offs relating to inventory, etc., by and large, oil marketing companies have actually delivered on the numbers. So I think if I have to play this entire, crude oil fall, I would be more comfortable buying a paint company or an airline company or to some extent tire companies, because for oil marketing companies, the case becomes slightly more complex. It will hinge upon what kind of price cut the government may do, what kind of numbers are we really going to see. So, as a technical opportunity, I think some of the other pockets are better placed.
My producer just prompted me, Hemang, that we need to go and discuss Bajaj Finance. I'm not surprised. I'm sure you're not surprised. Avan is not surprised. And none of our viewers are surprised that if a Bajaj issue comes up, if an issue comes out, or if a IPO comes from the house of Bajaj after a gap of 30 years in this kind of a market, it will get absolutely table thumping response. And it has got an absolutely table thumping response. But Hemang, Reliance Power in 2008 actually got a response which is higher than Bajaj Finance. So anybody who's thinking this is euphoria, can we just take the clock back and say that if Reliance Power in 2008 at an index level of 25,000 got a response which is higher than Bajaj Finance, we are nowhere close to euphoria in the IPO market?
So, Nikunj, I think the times were different. When we look at the current scenario, there is a larger acceptance of emerging themes. People are not, they don't mind paying very high valuations for totally, emerging, innovative kind of ideas, etc. I think Bajaj Finance, the excitement is more because you are looking at a flip trade. You if you either if you're a fund manager, you get it in the anchor book. After 1 month lock-in period, you just look at what kind of gains you are likely to get. Retail investor, if you get the allotment, you can flip it at the time of listing. So I think we have to differentiate the current narrative about some of the IPOs, the kind of response that they're getting. It's not as if that this is all long-term money and people are getting excited about 2 years earning growth of Bajaj housing, but it's more about the flip trade. 80-90% of that is like that. And because of the current market scenario and some of the performances of the IPOs, people are queuing up to buy into these names.
So, if Bajaj Finance goes in for a reasonable listing, 30-40% higher, would you buy that in your coffee can portfolio, Hemang?
Certainly not, Nikunj. I think if you look at the housing finance companies, the biggest boy in the town has been HDFC Limited, which got merged into HDFC Bank. And we all have seen how it has underperformed big time despite being a consistent performer. In fact, it has outperformed the bank Nifty, which has been the weakest of the index in the last 1.5 years. So I think this is not a theme where one can really get a big upside potential. You've seen how the banking sector has underperformed in the last 1 year. So I would rather look out for some other opportunities rather than getting into this name.
Okay, that's the view coming in. Hemang, gonna let you go on that note. Thanks for joining in. What is the pre-open?
If you like this video, then like, share and subscribe to ET Now.